Hello, this is Sarah Snell Cooke of Cooke Consulting Solutions and host of the Credit Union Connection. I had the opportunity a couple weeks back during the NAFCU Congressional Caucus to sit down with CEO Dan Berger. We talked Interchange, third-party vendor authority, which of course the NCUA is seeking, recession, inflation, CECL, and more. Check it out.
I think it was the policy issues that we're focused on. We're really focused on Interchange, third-party vendor authority for the NCUA, and it's just how engaged the attendees were at our conference. They were excited to be back together. It's great to see everybody in person, and that's tremendous. And the level of policymakers that came and spoke here, all of it just made a terrific experience overall.
Yeah, I was really impressed. I thought the CFPB director coming here was very brave of him.
He was, and he answered the difficult questions. But in fairness, and I think I said it from the stage, he and his team have been very good in sharing information with access and talking to us. We may not agree on everything or anything, but he and his team have been fair to us in terms of information and access. So that's all you can ask for.
Right. And so what are some of the key issues that you're asking your members to bring up to the Hill this week?
Yeah, I think I mentioned a little bit earlier, but it's Interchange, third-party vendor authority, things along those lines. It's things that are operational issues. And so we want to make sure that we can continue to provide the services there and don't let the big box retailers steal the revenue and put it to their Wall Street pals and their shareholders.
So aside from what you're going to be bringing to the Hill, what are some of the key issues that you see for your members looking ahead?
I think looking ahead, especially in 2023, I think the ongoing inflation toward the end of this year is a problem, but then that triggers kind of the recession that could be happening. I think those are the major concerns would be the recession in Q1, Q2 of next year. We're hoping for a soft landing, but it doesn't look like it's going to be that way, but we're monitoring that closely. I think that's the biggest concern for NAFCU members and the credit union industry overall.
Right, and NCUA was very quick to act too,
yes.
To fix the NEV issues.
Yeah, exactly right. And so that was an important step, and we're very appreciative of that. And so there's other things. You got CECL, of course, in 2023 being implemented in January of next year. That's always a concern. We try to get exempted from it being non-public banks. We were not successful in getting FASB to move on that, but we keep trying to put pressure on them, as do the board members of the NCUA. And we'll see, but our members have to be prepared to implement CECL next year. So that's another headwind.
Yeah. And one of the things I thought was really interesting is the CDFI panel. I love those. I love all credit unions. Well, right. Those credit unions.
Yep.
What has been NAFCU's role with the CDFIs?
We've worked very closely with Kathy and the staff of Inclusive, meetings on the Hill, getting more people into the CDF pipeline, talking to the Treasury and NCUA about the delays that's going on with the application process and the backlog that's there, and working to try to get that cleared up. And so we've worked hand in hand for years, but especially in the last 12 months.
Mm-hmm. Are those credit unions going to get hit more or harder by the inflation and interest rate risk?
Yes, I just think because the economies of scale, they don't have the capital buffers usually to withstand some of these economic headwinds that are coming. We have to keep a close eye on them and get them the help they'll need.